Once you've completed your non-operating section of the income statement, let's check your work. You should have interest revenue and gain from extinguishment of debt as your other revenues and gains, and interest expense, restructuring charges, and losses from earthquake damage as your other expenses and losses. This will give us income before tax. Oh, now we're going to complete the income statement. We'll get income before tax of $808,000 less income tax expense calculated as 30% of income before tax, and that gives us our net income of $565,600. Our next topic is that last item on the income statement, earnings per share. A recent article finds that Share is believed to earn roughly $28 million what? Not like that. SHARE, like a share of stock. Can you send me the updated slides? Okay, thanks. Okay, ignore that last slide. Earnings per share is a significant business indicator. It's one of the most popular measures of company performance because it takes net income adjusted, which we'll get to in a minute, and it divides it by the number of shares of common stock. So earnings per share is typically used by common stockholders in saying, how much of that company's performance is mine? Now there's adjustments that we need to make. Remember, we need to subtract out any preferred dividends that were declared during that period. Why? Well, preferred stock is another type of stock, and this is a measure used by common stockholders. So net income less those preferred dividends, and divide that by the number of common shares outstanding. And of course, this must be disclosed as we saw on the face of the income statement. Here's an example from our company with the multi-step income statement, the operating section, the non-operating section, and then the earnings per share. Let's continue with our example for Jake Crew Company. We know that net income was $565,600, and it tells us that, let's assume that 100,000 shares of common stock were outstanding. Calculate earnings per share. How do I know that there were no dividends? Because there's no information about any type of stock other than common stock. So if a company only has common stock, they do not have preferred stock. And without preferred stock, there cannot be any preferred dividends. So net income of $565,600 minus 0 preferred dividends divided by the 100,000 shares of common stock gives us earnings per share of $566. To conclude this video, we covered the income statement, the operating section, the non-operating section, looked at the line for income tax expense, we get to net income, and we also discussed that last item that we see in the income statement, or earnings per share.